2021. January is pretty much almost over. Getting ready to roll into FOMC and a whole bunch of other stuff. Okay, pretty exciting. Yeah. Today, okay, so just for anybody who's checking out the stream or watching this video afterwards, I'm not a trading teacher. I'm not a guru. I am a student. And if you are watching this, you should consider this basically a book report on my day, how the trading day went, what I was thinking about. And by all means, something I'm encouraging people to do is please grade me A through F, whatever you want as far as how well you think my book report is. Leave any notes in the comment as far as what I should cover and or what I may have missed as far as like my report. Okay, so we're going to go on today. We're going to talk. This is a huge red day for me. Very bad red day for me. I'm down $358 on the day. Not good. There's some side stuff I want to talk about before I go into what happened today, where my trading wound up, and stuff like that. Okay, there's a few things that I've been doing that are in the positive direction. One, trading has been an obsession of mine, but I had become sort of codependent on trading in order to give my life meaning and purpose and all of those things. This was a very bad situation. One of the things I've been trying to do is get outside of trading and into real life. There's things that I would neglect. My house would become very, very dirty. My kitchen was gross. If you have been following the channel for a long time, I'm a chef, or I was a chef for a long time. So a gross kitchen is usually not my MO. But I was so obsessed with trading, I let things like that slide. The other things I started letting slide were my physical fitness. And so I've since tried to turn the corner and make those things better. And in doing that, my trading has more or less gotten better. Okay. Now, as far as trading goes, the few things that I've incorporated as far as making my trading better is I've begun tracking my trades, which trade setups work, which trade setups don't, the number of times I follow my setup versus the number of times I don't follow my setup. And then sort of logging and sort of how that happens. And a big part of that is now coming in and doing this show here where I talk about what happened. Okay. I've learned a lot since then. I've learned a lot about my asset class, which is I trade options and I trade 0-day to expiration contracts. And so I've been studying and learning this stuff and practicing it. I have been practicing with real money. Maybe that needs to end. I don't know. We'll take a look at it tomorrow and see how we do. But coming into a point where we're running into some really steep problems. And so I need to go and find a way to iron out those problems as far as taking trades on or putting positions on that are not my trade setup. All right. So what I want to talk about today is I put on a put position, and this put position basically I call the show the slow death, and that is exactly what today was. You will see behind me, this is a picture. I could not get the actual chart to load to where you could see it, so I did take a snapshot of the chart. Which is something I should be doing of all of these charts anyway, as far as my trade goes for my own personal review. So this is something I will add is charts or pictures of snapshots of all of the trades I track. The cool thing about Webull is now letting you see the chart of the price action on your options contracts. Okay. I didn't know that this was possible till about, 10 days ago or maybe 2 weeks ago. I started looking at this and started using it, and it is very, very helpful. And you can see here. Okay. So what I want you to see here with inside of the put position that we had, you have basically a long arm of consolidation, and then into expiration, you get this tank off. Okay. And this is really, really challenging for me. And the reason I want you to see that why it's challenging for me and how this really challenged me in my position today is I'm going to put on a chart of the SPY. And what you can see from SPY and the move in SPY is that we gap down into the morning. Consider this basically the report of the chart action today. Gap down in the morning, we catch this bounce up. My first trade this morning is I waited, I let the gap down, I let the bounce up happen. I came in looking for the double bottom in here. I came in too early. Now this is a which chart is this? Sorry, I forgot what time frame I put on here to show you guys. Okay, so we're on the 15-minute chart. So I was on a 1 to 5 minute chart here. On the 1 minute, let's just go over there. This will make it easier. Let's just go to, let's say a 5-minute chart. Okay. So this has been a normal setup of mine that has been fairly successful so far in the past. Okay. We get the gap down. I'm fine with that. Get the bounce. I ignore that. Again, not trading the first hour of the morning, usually letting the chart develop and unfold. We get a pullback here, a break of swing low right here. Okay. This is what I want to see, is that where we open today creates our first swing low. Then we get swing high. Okay. We got a break of swing low. I've seen this before. It's done this before. Break of swing low and then starts moving back in the other direction. Okay. This is where I enter my first call position. We get the move up and then the second move down, which basically was a red thing. I lost about $100 on that trade. It was not a ridiculous trade. It wasn't even a ridiculous loss. It was actually pretty fine as far as I was concerned, within the bounds of trading the position, the contracts that I'm trading. Okay. So as far as that goes, everything is good. Again, you start to get this sort of thing going. You get this basically what is called a falling wedge here. Now, most people tend to think of this. The falling wedge is typically a bullish setup. Okay. It's from what I understand. Usually you're having this consolidation of price into this sort of falling wedge where you're seeing this accumulation sort of happen. Okay. So coming into this, I don't have the wedge yet. I have two peaks. I have lower highs and just barely and technically lower lows. Okay. So we're into a bearish trend. So I go ahead and into this. So I cut the call position, take my loss. Into this next bounce, I take on the short position. Okay. $400 puts cost 17 cents. Fantastic. Great chance. It's a solid trade, as far as it goes. Even although not on this time frame, on one of the other time frames, I had my signal. One, we had a failure to break swing high. Okay. So we had a rejection from swing high, put the put position on, and here we go. We're away to the races, going down. Then we get the bounce back up. And this all happens. Now, this is a 5-minute chart. So each of those candles is about, 5 minutes. But this move actually happened a lot quicker in just like 2 or 3 candles. And I went from being very, very green on my puts, over $100 green on my put position, to being in the red. Okay. It was here that I then noticed I noticed that you were forming this falling wedge. Okay. Now, if you know anything about measured moves or falling wedges or any of that sort of stuff, again, this is where you begin to say, okay, well, this is a bullish setup, right? It typically tends to become a bullish setup. So instead of going and cutting my puts for the small loss that I would have taken, I went ahead and bought calls on the other side of it. Now here you're at about 403. You're in that 403, 402 and a half range. So I'm winding up in a position where I'm 402 or 400 on the puts and 405 on the calls. About $2.50 move in either direction. All of that seems as though it's fair game at the time. Basically waiting for a commitment one direction or the other. But what instead we get is this slow grind down. Okay. So you can actually see the call position I have up there. The 10 calls cost 17 cents. That was $170. That was a $170 loss. Here at this point, I'm in this spread. It is a bad situation. And I have 2 options. I either cut it and automatically just take whatever losses I can, or I hold and hope for a break to one side or the other. Okay. So you can see from my $400 put position, we got down. Now we came down, we hit 400.5. You can see the low of the day came in close to the end of the day is 400.3. And what happened there is this slow burn down here, all of this buying pressure that came into this kept those puts from printing. Okay. They kept the volatility down. They kept it moving slow. So I'll go ahead. You can see the grind down, and I will show you even then. We will close that out. We'll go back to our image, bring this up again, and you can see here where the puts kept trying to break out above this resistance level. Here I was in right at resistance. And this is some of the stuff that I really probably messed up on. I probably would have been a lot happier had I waited till it came into some of these lower prices here around 14, 15, 12 to 14 cents. Probably would have been a lot safer position for me to be in. But by the time I'm here, the move is happening on the chart. You wind up in this really tough spot. You can see we never totally broke above 27 cents. And here's where I got really, really screwed up because I'm in at 17. We make it up into the 27 cents, even in the 30s a little bit from where my entry was. And what I'm looking for is a chance to offset the losses. I'm looking for follow through to the upside on this put position, and it just never comes. But it's almost there. It's almost there, and SPY keeps trending in my direction. The other thing I want to make very, very clear, and something I didn't talk about, is I did attempt to get out of call positions several times throughout the day and could not get an order fill. There did have it was really this weird perfect storm for me today of just really it was death by 1,000 cuts in a very slow and grotesque fashion. I don't want to make excuses for this. To be honest with you, when I saw the trade wasn't working, I should have cut the put position regardless of where I was at. And I never should have put on the call position, or I should have cut the put position as soon as I had the call position on. One of those two things. I never should have wound up in a spread. I didn't really mean to do that. I was hoping to catch the calls because they were sort of cheap into the possibility of the breakout wedge. Again, a large part of that is none of that is my trade setup. I was really trying to mitigate loss. In a lot of ways, where this is probably the equivalent of averaging down. Again, it was a wide trading range, but it was a slow moving ticker, or a slow moving tape. So the idea that you're going to trade this, maybe that, again, this is something that I'm experiencing at this point, is that, I've been fine to trade slow moving tapes as long as we're directional. I've been successful with that, but at the same time, I did not know that the risks were this bad. And on top of that, really, again, there was a bit of throwing good money after bad. So I didn't respect my setup. I didn't follow my setup in some of this. It would have been a red day either way. This was wrong. It didn't work. The call position was wrong. It didn't work. I was very fine as far as like what I talked about in the video yesterday is that it's good for me to come in and say I lost money, right? Because I respected my setup and I respected my risk. That is absolutely acceptable. What happened here today was not that. I kept trying, maybe the equivalent of force trading as far as I'm concerned. And then again, like I said, where I got to in here in this was I felt trapped. I felt pot committed. The chart kept moving in my direction. I needed a simple break. But as we got through the end of the day, time just got away, and they managed to keep it slowly going down. So I don't know what caused it. I don't know why it slowly ground down. I haven't looked into it. It doesn't really matter to me at this point. What does matter to me is that I need to respect this chart a lot more, especially the put chart. or the chart of my options. I definitely need to respect that a lot more. So that's where I'm going to end up with for today. Okay. Going into tomorrow, we're going to go back here and we are going to go ahead and pull up this. We will go through some of our disciplines and see what we think looks like on the chart. Go over to the daily. Okay. And we will go over here and turn on the moving averages. Okay. So this will be pretty interesting. Trend is up. Bias is long. Your resistance turned into that upper Bollinger Band, but it was more that 408 level. And if we go back, you can see where that was very similar on the chart from before. Okay, I'll pull that up. So you can see on the chart before, the resistance became that peak at 408.61. You can see we got nearly to that over here on Friday, pulled back, sold off from that. Can this, again, I don't know. I'm not even going to predict it, what it'll do. I have nothing. There is one thing I can say right here is that if you lose, this is last week. This is the start of last week, by the way. I can probably get rid of that. I was looking for a 50% retracement of last week's price action. There we go. Okay, so I was looking for a 50% retracement of last week's price action. A move to 397 will give you about 50% of that, of the move from last week. Would not be surprised to see it take back that much. Wouldn't be surprised to see it go up. I have no opinion on this. What I will tell you is that your slow stochastic is embedded. Okay, so if we go through this trend, and this is a swing trader's process. This is not mine. This is a swing trader's process, but it does give us a reference to where we are. If you consider this whole chart like space, where are you in this space? What can you do in this space? How can you move in this space? Okay. So here you can see on the daily time frame, you're up against the upper Bollinger Band. Not to mention you came into this peak resistance over here. Good to test that. To see it pull back and take a breath wouldn't be too ridiculous. As a matter of fact, in order to attract new buyers, you're probably going to have to do that. Okay, so the way we look at this is the trend is up. The bias is long, as long as you're over the 18-day moving average. This line right here is your mean or your 18-day moving average. They're sort of the same thing, running through the middle of your Bollinger Bands. Your momentum is up, and you have maintained on a daily time frame an embedded reading on your daily time frame. So the idea that now, if this is lost, if these two numbers close below 80 tomorrow, or if the S&P futures over the night come underneath 80, you can expect a move into the 200-day moving average or into the 18-day moving average. One of the two. Usually most of the time when this is lost, you make a run. Price makes a run for the closest main moving average. Right now, I believe that's your 200. So would not be surprised to wake up in the morning and see this gap down below 400. So but again, this is not a prediction or not a trade setup. This is nothing. This is just kind of some basic market structure things that I think that I have noticed have been pretty honest. And you can honestly, I'll even give you an example of this right here. Again, I've demonstrated this a few times on this channel, but if we go to the 2 hour, the thing I want you to see on the 2 hour is you have this embedded reading. Both numbers are above 80. As soon as you lose that, you make a run right there to the 18 period moving average on the 2 hour. You can go around and look on any chart with the slow stochastic on. You can see every time it comes, these two numbers drop below, it tends to make a run for the 18 period moving average. It's pretty obvious on like very short time frames as well, like the 5 and the 10 minutes. So check it out. It's kind of a cool thing to know about. I trade based on it a lot. Usually I will target the 18 period moving average as like a price target. And then this is where, again, this is one of the things too that gets me in trouble a lot is once you get the break below an 18 period moving average on any time frame, this is where I tend to wind up getting in a lot of trouble, putting on positions that I don't know, positions that are against my trade setup. Part of that is because, especially on these longer time frames, you are looking for longer swing type positions, something that could last a day or a couple of days, or even a week as far as like a trade goes. So it could take that long for them to play out. So there's a little bit of this where like I need to sort of build in here a timetable where there's a no man's land. Once you start getting above the 30-minute or even the 1 hour time frame, you really run into some challenges as far as how the trade setup works, especially because on one of the problems here is like, look at the 2 hour right here. And then let's go over and look at the 30-minute. Like, this is one of the things that I'm having an issue with. So if I go over here and I look at the 30-minute, right? So you saw in the 1 hour, we just came out of overbought, but on the 30-minute, you're deep down here and oversold, right? So you've got this you got the 2 hours still pretty well up here. Momentum's still pretty strong, but the 30-minute is way down here, is already oversold. So you're in this position where if they want to turn this back up, it wouldn't take a lot. And you can go to even shorter time frames than that. And you go to the 15-minute and you can see where they really are trying to do it, right? They are trying to bring this down. They're slowing its rate of fall. They're trying to turn it back around and make it go back up. Now, I hope they do. I hope I'm right. As far as I can see right here, there is a long trade setup coming, but they've pushed it down into this. And if it turns and breaks out to the upside, you've got a lot of really great upside targets up here in the upward direction. So, it's 405, 408, you can even get this Bollinger Band all the way up here. So, again, that's the 405. So anyway, that's kind of the stuff. But once we get below there and you're already oversold on these shorter time frames, the longer time frames get a lot harder for me. And I wind up making a lot of bad decisions around there. So I need to figure something out as far as not trading on, sometimes on the 1 hour, it's great. Sometimes it's not. So I'm a little devastated from the trade today. This was ridiculously tough to me. That was like really hard. It was a hard fought day for a major loss. And then it's even worse that I'm very confused as to what I actually learned today. What's the movie Burn After Reading, where they're just like, the end of the movie, they're like, what did we learn today? And they're like, I don't know. And then the boss guy's like, well, we won't do that again. And it's like, I really, again, aside from it was going to be a red day and it would have been fine. But the only thing I did is put on this call position that was really bad. And even then, like, I couldn't make myself cut it. Like, there's just this overwhelming belief inside of my head that the minute I sold those calls, they were going to snap this back in the other direction. So I'd wind up buried on my puts. And I took a small loss when I cut those puts. I only sold them. I bought them for 17 cents, but I was out for like 11 cents. So it's only a $60 loss. It wasn't too bad. So even then, it's like only a $160 day as far as losses go. But I double that with this call position. So, this was wrong, but at the same time, I couldn't make myself cut that bitch. I don't know. Honestly, paranoia. It was a really weird experience. And the other thing about it is any breakdown here, right? Anywhere in this that you break, right? At any one of these breaks, you could catch, just a deep, massive move to the upside. So you wind up just kind of there, hopeful that you catch that sort of falling. Well, you don't catch it, but you're there to ride the falling knife down. And that would cover your ass on your call spot. So mentally it was just very challenging, very draining. And so I don't know. I really don't. That I will probably spend the rest of the night just either thinking about this or whatever. So, and trying to come up with something and explain it. I have no, I mean, it was bad. It just, honestly, the only thing I can only think of is I should have came in. Everything was right though. The premium to delta ratios were fine. The price action seemed fine. Everything, it just where I went wrong. I don't really, it didn't work. Is there some place I saw, well, this isn't working and I should have just ended it? Today's really confusing to me. So if you have any thoughts, by all means, leave them in the comment section below, because I'd take anything at this point. So, all right, coming up again, it doesn't really matter. You get FOMC coming on Friday. I'm not going to trade Friday, I'm not going to trade Wednesday. FOMC it's a shit show, man. You come in, the premiums are way high, everything's super expensive, so I'm hoping tomorrow I can catch up, make up some of my losses. But even then, again, that's still just the wrong mindset, like make up your losses. That's a stupid idea, right? Like, I'm hoping tomorrow I trade well, I'm hoping I'm putting in my mind that tomorrow I'm going to respect my entries. I'm going to respect my risk, and we're not going to put on spreads. We're going to obey the fucking rules. So that's kind of the plan. All right. That is going to do it for me. That's my whining and bitching for today. And again, my sort of book report. So check it out. Tell me what you think. Grade me. Don't grade my trading. I already graded. I mean, it's already an F, right? You lose $350. I lose 30% of my account in a single day. That is absolutely retarded. Anyway, and not in the like you're stupid, like, the way you retard dough, you like make it go slow down, you make it not grow, you actually make it, sometimes you even make it shrink. Anyway, that's kind of how I mean that. That's more or less how I mean it. Anyway, Russell Journal, written, edited, hosted by me, Russell List. We're produced by Social Media Shows. Maria Perez is our executive producer. And until tomorrow, maybe we find ourselves a new catchphrase.